Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Overnight, the Australian dollar rallies and extends and now looks towards the key level of 67.4045 as its rival, the US dollar index, tumbles to a low of 104 figure. Looking ahead, the market participants are gearing up for a data-packed week, beginning with the US government's release of the job opening data on Tuesday. This data will provide insight into the number of positions employees advertised at the end of April. Friday also brings the highly anticipated US non-farm payrolls report, offering the latest monthly update on the overall job growth. Forecasts predict the additional of 185 jobs added, up from the previous 175,000 jobs, while the unemployment rate is expected to remain unchanged at 3.9%. Also, the Reserve Bank of Australia has moved its rate decision and is scheduled on Tuesday, June the 18th. Different from the usual timing at the beginning of each month. Based on the technicals, we are bullish, and with the trend showing a moderate support to the trend, could eventually see a break of 67.4045. If so, should see a rally on to 68 cents. Any pullback likely to be limited, with 66.5 seen as a short-term base. The euro dollar, supported by the weakness of the US dollar, has rallied on and now reaches 109 and potentially could even extend on to 110. But do be on your guard, as profit taking may emerge as we get closer to the top side target, given the fact that this trend has been going since 106. Nevertheless, I like the way this pattern is formed and holds on the trend, and therefore looks towards the target of 109.25 and 109.65 to 75, and with a short-term support seen at 108.65. Dollar yen was weaker overnight and crushes the level of 156.40, and from there exposes the region of 155.80. A break there would give further scope to the downside and eventually open the path to 150 to 151 as a broader target. Technicals are heavy, so any upside attempt likely to be limited, and the short-term cap seen around 156.60. Sterling also very strong overnight and pushing on to 128. That could see a further gain onto 129, and the broader target seen from the weeklies at 130 to 131. Any pullback likely to be limited, but do look where the base is. It's a little bit to the deeper side and coming in around 126.40 to 65. After 4 consecutive attempts to the downside, the market again rejects that key level for spot gold at 2,321. And from the rejection, still looks a little bit mixed, and therefore we should not rule out another down test, even though the dollar was weaker. Given that the highlighted top side of 2,352 to 4 is remaining as a short-term cap, therefore we shouldn't rule out this downside test. If we do see a break of 2,321, this would expose the region of 2,250 to 80 as a potential target. Turning to oil, we can see that the shoulder, head and shoulder pattern from the break of the neckline gave us a measured move down to 72.80 to 73.60, which has now been reached as the low has been recorded at 73.49. Given the fact that the market is still somewhat heavy, I'm a little bit cautious to the downside, as we did get a response to the bullish case early this year in January. And no doubt we may see profit taking come back into play, so I'm a little bit cautious. And therefore, I'd rather sit out now and remain neutral in the short term, just to see when the next opportunity arises. Well, that's a wrap. Thank you for joining me. As always, look out for the interest rate report, and I hope you enjoy the great start to the day.